In today's video, we are going to be talking about how to trade against the trend. Now, don't get me wrong, trading with the trend is good. Trading against the trend, it's equally good, but carries high level of risk. What do I mean? You are easily going against the flow of the market as a counter trend trader, but that does not mean it is not doable. In every market, whether the market is trending upwards or trending downwards, you always have buyers and sellers in that market. And of course, even when the market is ranging, you still have buyers and sellers. At the end of the day, an uptrend will still graduate to a downtrend, and a downtrend will still graduate to an uptrend. And that is the market for you. It tends to move in cycles. Now, with that said, what we have in front of us is the cable, the GBP USD, and I want to show you exactly how we're able to get some good positions on this particular market and how we made good pips at the end of the day. Because once you understand what the market is doing, you can easily take advantage of it. I repeat, you can easily take advantage of it. Now look at what we have right in front of us. First things first, you can see that the trend is down. The market went down. Initially, you had this movement here and went up. But from this top, it went all the way down. Now, as it's going down, we can now establish and agree that it's a downtrend. So we had here as a form of support, you can see the support areas. It broke the support here. But the funny thing now is that when it broke the support over here, the next question is, what do the buyers want to do? And where do they want to do it especially? Because obviously we know the buyers want to jump in and start to load positions because at the end of the day, the market needs to reverse, right? So it's like a game of chess. For the two players, for the two parties involved, buyers and sellers, it's always good for you to have an idea what the other person wants to do. So when the price broke this area here, broke the support here, as you can see, once price broke the support here and it went further down, the question now is, where do the buyers want to enter? If we switch over to the 4 hours time frame, now you start to get more information. Here was an area of support. Also, here was an area of support. And the price broke out aggressively and then went to this area of support. And judging by the candles, after this big, massive candle to the downside, judging by the next couple of candles, you can see that it now decided to rest. That means that it has found some form of support there, which is from the past here, right? So as it had found some form of support, other things that you can add to the mix, as an example, you can add the likes of divergence. Divergence helps us to know that price is more or less line. You can see the price over here, after it got to that support from the 4 hours time frame we were looking at, it now decided to form a double top, a double bottom over here. Mind you, that double bottom over here at that 4 hour supply, that 4 hour support rather, it also gave us a divergence as well. So all these things being equal, and if you look at these candles over here, these two candles, this is what we call the bullish engulfing. So let me list out the things that made us to go counter to this trend, right? And that's what we're talking about in this video, how to go against the trend, how to trade against the trend. Now look at it. We had the 4 hour support in our favor, which is 1. We had the double bottom, number 2. We had the divergence, number 3. And we had the trigger, the bullish engulfing. At the same level, everything came together as a form of confluence. Now, some might say that, but what if we buy over here? Isn't this the area that the market is going to find trouble? Yes, quite all right. But we're expecting the market to break that area and push to the main major area over here. And I'm also going to tell you why it's a major area over here. Because remember, as we said, just like a chess game, you need to know what the buyers and the sellers are thinking, what both parties are thinking. So if you are a buyer, think, what are the sellers thinking of doing? If you are a seller, think, what are the buyers thinking of doing? Now, once you understand these questions, it will help you. Look at what happened. Price got to this area here, right? That was supposed to act as resistance based on the fact that in the past, it was support. What happened here? It stalled and then it fought its way here for a while and moved sideways and sideways. Meanwhile, as you go to your entry here, your stop loss would have been lower. What could you have done? You could have either moved to break even or you could have done a partial close. And this is what our EA normally helps us out with. I'm just going to show you how the EA looks like. If you go over to Expert Advisors and Properties, you see where we have the stop loss, take profit, break even, trailing stop, percentage close. When the price got to this point, maybe it was 20 pips or whatever, you'd have put 20 pips here and then to close 50% or whatever percentage you put. So this EA, our trade management EA, the semi-automated robot, it helps us to manage the trade. You could have easily closed part of it or done a trailing stop, and then look at what happened. Voila, it broke out, and it is more or less at the other area of interest, which is here. So this is an area where the sellers would have loved to have been selling more than here. Why? Simply because if you are a Fibonacci retracement trader and you draw your fibs from the swing highs to the swing lows here, you will notice that it is more or less at the 50 Fibonacci retracement area. And as you can see, this is more powerful than here. So at the 50 Fibonacci retracement area here, as you can see, it gives us that confluence, and it's a good one. That means that probably much later, I would love to do what? For the price to come up a bit, then I would love to look for position to sell and take it back down. Hopefully, let's see how things go. But this video is to focus on how to what? How to trade against the trend. Yes, it is very, very doable. You need to do what? You need to put all the parameters into play. The higher time frame area of interest, like double bottom that we had over here, divergence, and of course, the price action candlestick or candlesticks trigger. And that was what helped us to place the trade. And we had good reward. Think about it. Entry is over here, stop loss is over here, and your take profit, this was where we got out over here. I'm going to do something. I'm going to show you a screenshot now of this particular trade that we took, and you will see that we actually had two positions. This is it over here. We had two wonderful positions, as you can see, where we got in over here, as we just mentioned, off that double bottom. We even had another position here that we added, and look at what happened. It broke higher and it hit our take profits. We had two take profits for the two positions, and then we are out of that market. So this is something that is very doable. And if you have any questions in understanding this much better, feel free to ask. If you are new to the channel, hit the subscribe button and turn on the notification bell, right? As we're wrapping up now, I want to say thank you. Watch this video over and over again. Don't let anybody tell you that you cannot be a counter trend trader. Don't let anybody tell you that counter trend trading is not the way to go. You can trade in an uptrend, you can trade as a seller. In a downtrend, you can trade as a buyer. No matter what the case is, it is very, very doable. Of course, there are people that are doing it. Those that are doing it do not have two heads. That means what? That means that equally you can do it as well. Okay, guys, thank you for tuning in. Don't forget, hit the subscribe button, give it a thumbs up, and if you have any questions, feel free to ask. Okay, thank you guys and have a good one. Goodbye for now.